Hi there traders, Tom here. Hope you're well. A very happy new year to you all. I hope you're raring to go for 2014. I wanted to do my first blog of the year via video, just to try and make things a little bit more interactive going forward. I'll try my very best to keep it as short and succinct as possible. All I want to do is use the video to go through a few of the trades that we looked at prior to Christmas, and just to see how these are going, and also to see what's looking interesting for the next few weeks, because if we can get off to a very good start, it means that we can attack the year on the front foot. So let's start with the stock markets and the FTSE 100 more specifically. I know I did blog about this in terms of the reasons why we were taking the trade, but let's just summarize those points again. One of the key reasons was a fundamental bias based on the Santa Claus rally. Now, I'm not much of a fundamental trader. I am a heavily technical based trader, but if I can combine the two together, then that makes for all the higher probability trade. So from a fundamental perspective, we knew around about the middle of December, stock markets generally and historically like to rally to the upside. So we were just looking for an excuse to get into that trade. So we had a very, very nice technical excuse to get into this trade. Came around about the middle of the month, coinciding with the Santa Claus rally. So let's have a quick look at that. So it was around about this area here, around about the 16th of December, that we saw price come all the way back down to a key level of trendline support. If I just zoom out, I can show you the significance of that support. So if we zoom out, we can see all the way back to, around about May 2012, we had a really sharp reaction. Then again in November 2012, another sharp reaction. Then again, we had the third sharp reaction around about June 2013, and then price towards the middle of December came back to that support level. So price had come back to a level where we were expecting a reaction. No guarantees that it would turn at that point, but we expected a reaction. What was also very, very interesting was the stochastic divergence here. As you can see, the price came down, giving us these beautiful cycles, lower lows, into that support level. But if you notice on the stochastic, we actually get a higher low, and that's divergence, and that's a sign that we're going to get a sharp reversal. Now, we still need to see that the buyers are moving into the market, and that was displayed really on the 16th of December, where we got that beautiful bullish outside bar. That gave us a strong clue that buyers had re-entered the market at a very technical area. There was lots of reasons suggesting it should go up. So entries were popped just above the high of that bar. Stop loss was underneath just the low of that area, nicely protected underneath that support level, and we just left that order on until it triggered on the 19th. I think that coincided with the Fed news, but it was still supported by a very strong technical setup. We were triggered into the trade, and it rallied very, very nicely to the upside and hit our first profit target. And again, I blogged about profit taking on springboardyourself.com, so check that out if you haven't already seen it. I like to take a couple of positions if possible. 1% was my first target, that's banked. The second target, I want to leave that to run to generate as much profit as possible. Stops are now at break even, so my second position is now a risk-free trade, and I'm just going to leave that be. In terms of the potential target or the reward that we can get, there's a potential roadblock at around the 6,800 level. This level of resistance could cause price to stall. If it does break through that, then we're looking at really the top of the channel for taking a very, very healthy profit there. As you can see, the top of this channel has been respected all the way back to 2011, so we can see that there's lovely reactions to this top level here. So one, it may be a profit objective for my position, but two, it could be providing another opportunity to get into the trade short at this channel level here. So I'm going to leave that position to run. If you're in the trade, and it's great to hear a few of you are, absolutely fantastic. That's really, really good news. Take as much profit as possible from this trade. If it gets up to this first target, we're looking at a good 2.5–3%. If it gets to this top level here, we're looking at a good 6–7%. A wonderful, wonderful contribution to your 2014 profits. And you'll have noticed that the same was the case across all of the stock markets in regards to their bullish movements. You saw the likes of the European stock markets, the CAC, the DAX, they rallied very, very strongly. You noticed the US stock markets, the Dow Jones, the S&P, very, very strong movement. So I hope you're able to take note of the blog that suggested this was going to happen, and you were able to take some trades off the back of it. So if you did, wonderful. If you didn't, then it's a great learning exercise nonetheless. Okay, so that is the FTSE and the stock market. So is there a potential for further trades on this? Well, I'm always looking to re-enter if I believe that the market's still going to go higher. So there is actually a level that I see, a soft level, around about the 6,630 level, where we've had a little bit of a reaction here, a little bit of a reaction here, a little bit of a reaction here, and this also coincides very closely with the 50 moving average. So price could retrace, as all things do after such a strong move, to around about this level, and I may, if my technicals give me that sign, look to add another position to this trade. So we'll wait and see what's going to happen. It may carry on going, or it may give us a nice pullback for further re-entries. So keep your eye on the FTSE 100 and use your tools to help you get into the trade accordingly. Okay, so then we're looking Euro GBP. A few of you missed this, and maybe because it wasn't as obvious as I like to make it, but Euro GBP, I did blog on looking at a certain level to trade short from. Let's have a look at it, because we were in the trade long, and this was the blog that I put on the 15th of December. Will Santa rally the markets? So if I go to Euro GBP long, I maybe didn't make it as obvious as possible, but at the bottom there I did put price is now running back up to trendline resistance around the 8460 level, where sellers may turn back up again. Room still available to make the 3% on the long trade, which it did in the end, and then to look for a short opportunity if provided with enough evidence. So let's take a look at that. The level was 8460. So let's go and have a look at Euro GBP, because it turned almost on the button. So Euro GBP. So as we saw, a lovely downtrend, big, huge cycles, lower lows and lower highs, and paying great attention to this trend line here, this trend line resistance, this ceiling. Price had come down strongly, came all the way back, hit its head, came down strongly, pulled all the way back, and this was the point that we're looking at just here. And I think it reached 8465 was its high point. Let's just have a quick look at that. So it was around about the 8466, 8465. So around about 5 points off where I expected it to turn. Beautifully crashed into that level of resistance and just aggressively turned. Now, if you're a day trader, would have been pretty difficult to try and get into that trade, because there was no real clue in terms of the price action before it actually thrust away. So maybe dropping down to a smaller time frame would have been a useful technique to use. Maybe the 240 chart, the 4-hourly chart, and just watching price run into that resistance level on a lower time frame. So here we see it. It's bobbling up, climbing the stairs. It eventually gets into that zone there. We start to see some quite significant divergence on the stochastic just there, putting in new highs on the price but not doing the same thing on the indicator. So coming all the way up but actually coming down on the indicator, and then as it got into that trend line, notice the actual price action. We start to get inside bars. Inside bars are a nice reversal sign that the market is failing to go higher. So taking a break of this short would have given you a phenomenal entry, and I think you'd be probably looking at around about the 8-9%, and the trade's still open depending on your profit taking, where you want to take your profits and how you actually got in. If you got in and around this area, you'd be looking at a very, very healthy profit, but using the daily chart as a guide as to where you expected a reaction, which was at this trend line resistance just here. So again, if you took advantage of that, wonderful. You'll be sitting on a very nice profit there, and hopefully still in the trade and seeing it through to a potential double-digit return. In terms of where it potentially could turn, well, it again looks like it's in a bit of a channel like the FTSE was, but in a down channel. So as we see here, still looks like it's got plenty of room to get down to the bottom there. I don't know how many points, but roughly another 150 points. So there still looks like there's further room for profits to be obtained there. So if you're in this trade, then let it breathe, let it run, and take advantage of as much profit as you can take on this trade. Wonderful. Okay, so the next one was the Kiwi against the US dollar. I like this purely because of the government's intent to increase interest rates, which is going to have a knock-on effect on the currency pair. It's going to cause it to rally quite strongly. So, but that's not the reason why. That's not the main reason why I wanted to take this long. That was just one of the reasons. I am a technical trader, so I was looking for technical reasons to back up the fundamental bias to look for long opportunities here. So the Kiwi is very, very nice because it had a strong move up through August, September and October. It had a phenomenal move up just here and then had gradually pulled all the way back down again. And this is actually the 50% level on the Fibonacci. So if I take my Fibonacci from the bottom and draw it all the way to the top of that move, it comes slap bang into the 50% level, which also coincides brilliantly, let me just remove the Fibonacci, with this horizontal level here. As you can see, there's been some beautiful reactions to this horizontal level several times. I could even probably bring that down slightly. So here, resistance, resistance, resistance finally gets broken and then comes back down to use it as support. So actually I've been sat in this trade for a long time because I took this trade around about here and looked to buy, but it struggled to get through this resistance, actually retraced back, but has then eventually broken. So the trade is still going well. It has closed above this resistance line now, so be on guard looking for opportunities to get into this trade. If it carries on its momentum, it looks like it could have another similar move to this one here. So around about 780 points potentially, if it then decides to have another run up. So keep your eye on the Kiwi dollar for long opportunities. So if it does a similar thing to that, we have got some nice leg room to go much higher. So there's potential opportunities there. If we're then backed up by what the government's doing as well, this should provide some very, very nice opportunities. So be looking for your buy opportunities, using your tools, using your skills to get into efficient turning points in the market. It's broken above this resistance now, so gives us further confidence that there is ocean to move into. Okay, so that's Kiwi dollar, very nice trade there. And then finally was gold. Gold, I didn't post a particular blog item on it, but I did have some discussions with a couple of you in the comments box in regards to gold, because it was very, very interesting indeed, because gold had been in a phenomenal downtrend all the way to October 2012, where it really topped out. It's just been going down and down and down. But why do we like it for a potential reversible? It's this bottom point here, this 1180 level, where it bottomed out in the middle of June 2013. Price had come all the way back down to it. But what was most interesting was the ABCD pattern. So if we look at this top point here, price moved down sharply. Before then it reacted and headed back up, and then headed back down strongly again into this level here. And as you can see, the movement from this point here, which is what we see as A, down to this bottom point here, B, is 182 pips roughly. Then from C, which is this point here, all the way down to D, is 179. So almost identical duration of pips from the top point to the bottom point on both the AB leg and the CD leg. It's also a 618 retracement on the Fibonacci from this A to this B. Fell just short, but more or less the 618 range, which is what we're looking for an ABCD pattern. And then it completed itself in line with this previous low, which was very, very interesting indeed. Then if we zoom in to that actual zone there, what do we notice? Well, we notice that price has pulled back, thrust down again into that level, and actually rejected that level. And what do you also notice is, again, look at the divergence. This low is definitely lower. So zoom in. This low is definitely lower than this one here. But look at the stochastic, it's not doing the same thing. So again, giving us that interesting message that the market wants to reverse. So taking a break of this area here would have been a nice entry. If you didn't get into that trade, don't worry. Be looking for potential opportunities. If this is the bottom of gold, we could have a very interesting year indeed. And one thing I did notice, I do like to have a look at seasonality, especially with commodities, to see whether they're bullish or bearish during particular months. So I do use a little website called equityclock.com, and I have a look at gold, the gold futures contract. And in January, after a bit of a move down, we do see a pretty nice rally towards the early side of January. So this may be this rally here. So there's potential for a nice rally on gold through the next couple of months. So not a great time to be jumping in now, because obviously the move has already gone, but be looking, use your tools, use your skills for potential entry points into gold over the next few weeks, and trade as you see these opportunities arise. So that was gold. So plenty more opportunities out there. I just wanted to really focus in on these 4 particular asset classes, purely because we'd blogged about them, we'd talked about them prior to the moves actually happening. Now, I'm not a tipping service, I'm not an alert service, but I will give you the education and the focus on certain asset classes to watch and to keep your eye on, so that then you can use your understanding, your knowledge and your strategies to take advantage of it. So I'm really pleased to hear that several of you have already done that. For those of you that haven't, I hope that the information has provided some really good education, and that you can take this and utilize it through 2014 and give yourself a really, really good return on your investments. So I wish you well. I'm going to wrap up there. I'll continue to blog, so hopefully you can continue to take advantage of these moves. Please spread the word. I'm always looking to increase my subscribers, and I wish you very, very well, and I'll speak to you very soon. Take care.